Bloomberg Audio Studios. Podcasts, radio, news.
Some of us in the newsroom have spent the past few days at Africa's biggest mining conference in Cape Town, Mining Indaba, against a global backdrop of strong demand for critical minerals.
Most of the old known mines are gradually declining in grade. Most of the easy mines of the world have already been found, but there's tremendous exploration potential, in particular on the African continent, to supply world demand.
There's certainly a sense of optimism on the ground about this commodities boom cycle, as we talked about last week. But many are wondering whether high prices can lead to more investment and in turn help be the key to growing Africa's mining sector and industrializing the continent at the same time.
I see more opportunity than risk, I have to say, because in the last year, and really it has just been in the last year, the whole landscape has changed. Because fundamentally what has happened is that governments have recognized how important minerals are to any of their national security goals, whether that's defense, energy, industrialization. So that has brought with it a level of support that the mining industry has not seen in decades from governments.
On this episode of the Next Africa podcast, we'll look at the big stories that came out of Mining Indaba and why investors are still bullish on African minerals. I'm Jennifer Zabasajja, and this is the Next Africa podcast, bringing you one story each week from the continent, driving the future of global growth with the context only Bloomberg can provide. Joining us this week are Bloomberg reporters Matthew Hill and William Clowes, who have been with us all throughout the week at Mining Indaba in Cape Town. Guys, thank you so much for joining us. It has been a hectic one. Let's just start with this. Last week, we were talking to two of our colleagues about the growing strength of gold investment on the continent. But of course, as you both know, it's not the only thing that's getting the mining sector excited. Matt and Will, you've been at Mining Indaba for several years. I wonder if you compare the previous years you've been at this event to this year, how would you assess the mood, maybe? Matt, do you want to start?
Cape Town is absolutely boom town at the moment. There are thousands of people coming from all around the world, perhaps more than ever, given this clamoring that we've seen for critical minerals and Africa's critical minerals in particular. From conversations that I've had with people this week, there's been a couple of surprises expressed about how many delegates there are from the US this year, for example. I don't know. What have you been hearing, Will?
Yeah, it's pretty busy and bustling. I've been to these things on and off over about 7 or 8 years. And it's got much bigger in recent years. I mean, physically bigger. They need twice as much space for all the people, all the stands, meeting rooms and halls. So I think that reflects the sort of growing interest in this critical minerals. It's obviously anecdotal, but I've had several conversations with mining industry types who said Indaba used to be a bit of a jolly for them, a bit of fun. They didn't pack their schedules too tight so they could enjoy the Cape Town sun in February. But now it's all work, because there are deals to be done and business to be won. So yeah, it's definitely a higher tempo than it used to be.
Yeah, someone was telling me they haven't even been able to see the sun because they've been in the convention center so long. But I think as you guys are both alluding to, it reflects the growing excitement really in the industry more broadly. But what do you think it is that is really drawing people to this event? Is it the booming commodity cycle? Is it the global EV, the shift to AI that many people are talking about and the minerals that are needed? What is the focus for the industry?
So, yeah, I think obviously it helps that copper's at record prices and gold at record prices. But I would say trying to ensure adequate supply of these minerals, and preferably that supply is not too concentrated in one country. There's lots of research that comes across our desks and it comes with different numbers. But what is really consistent is that whether it's copper, lithium, cobalt, manganese, graphite, we're going to need to mine and refine quite a lot more of it to meet that demand. And because of things like the electrification of transportation or heating, which for instance requires a massive build out of electricity grids, or even the growing market share of electric vehicles, or there just being more solar panels and more wind turbines. All of these things I just mentioned are very metals intensive. So governments, industries, they're very keen for investment in reliable supply mining. But more than that, especially for the US and Europe, it's a problem for them that China dominates the processing and refining of so many of these materials. China's got hugely commanding positions in the value chains of wherever you look, copper, cobalt, lithium, rare earths. And they've been investing billions and billions in Africa for years. Places like Zimbabwe and Congo, so that the cobalt or lithium mined there can be sent to China to be turned into battery grade chemicals or battery packs and finally electric vehicles, things like that. If you listen to US or European executives and politicians, and as Matt says, there's a lot of them here, there's a big emphasis on developing Western supply chains for these metals, being less reliant on China for these mineral products. And for many, that will involve ambitions to source minerals mined in Africa, do a certain amount of processing here in Africa before shipping the material onto plants and factories in the West that for the most part don't really exist yet, but governments want to develop them to reindustrialize their economies and catch up this ground lost to China.
That's an excellent point that Will makes. It's a very steep learning curve for Western economies because mining over the past few decades, to a great extent, has not been the flavor of the month. Suddenly it is. And just to put Africa in the global context, Jen, you spoke to the head of Africa Finance Corp earlier this week about the study that they just published, which found that Africa has 20% of the globe's mineral wealth. And of that, $8.6 trillion remains undeveloped. So if you are looking for these critical minerals, Africa is the place where you have to be.
Right. And what was interesting about that, Matt, was that Samaila Zubairu was saying there is an opportunity there, of course, to serve the export market, but then also to serve what is critical and strategic for Africa, right? And so it's sort of reframing what this idea of criticality means, which sort of leads me to my next question for you, Matt. And it's this idea of collaboration and partnership-driven development as we see this shifting world order. How does that actually work, especially in an industry like mining? And as Will was just pointing out, China has dominated this, at least production of this on the African continent for decades. So what are you hearing about how this could work?
Yeah, I guess like one way to look at that is when you consider that the copper price has shot up above $13,000 a ton, which is more than double what it was just a few years ago. Almost inconceivable how quickly the prices climbed and how much demand there is for copper. Anything that involves electricity has to have copper. And Africa, the Central African Copper Belt, is the one place in the world where copper production has been growing quite rapidly and will continue to do so in the coming years. So that's kind of forced people who want copper to look at Central Africa, countries like Democratic Republic of Congo and Zambia especially. And what it's also done is given leverage to these countries about what happens with their copper, both in terms of the production of it, the transportation of it, and the processing of it. And we've seen a great rise in willingness for other countries like the US, the EU, and China to develop logistics as a partnership, not just lending money to these African governments who are already overburdened with debt to build roads or railways or ports or whatever, but actually partnering with them to develop this infrastructure that then operates on commercial terms. We've seen the Lobito corridor, which is backed by the US, refurbishing a railway line that runs from the Atlantic port of Lobito in Angola all the way to the copper mining area in Congo, and there's plans to then connect that onwards into Zambia. On the other side of the copper belt, we've got the Tazara railway line, which was built by China, Zambia, and Tanzania back in the 70s, but has since fallen into disrepair. Those three governments are now working together to refurbish that line and bring it back to life. Chinese consortium that's doing that is bringing in nearly $1.4 billion of their own money to bring that railway line back into play in partnership with the Zambian and Tanzanian governments. So there's been kind of like a new way of looking at these resources and how everyone can share the benefits perhaps more evenly.
Matt and Will, stick with me both. When we come back, we'll have more of some of the themes that came out from this year's Mining Indaba in Cape Town. We'll be right back. Welcome back. Today on the podcast, we're continuing our look at Africa's natural resources as we assess the mood of the 2026 Mining Indaba in Cape Town. Matthew Hill and William Clowes are still with me. Will, you've reported extensively on the Democratic Republic of Congo. Considering a lot of the reporting that we've been hearing about the government and the potential minerals deal, the deal with the U.S., do they feel like they have leverage at this particular moment to enact the best deals that would work for them?
Yeah, more than they did in the past, I would say. So, as you mentioned, the US under Trump administration has brokered this peace deal between Congo and Rwanda that is supposed to end decades of deadly conflict in eastern Congo. And as part of that, there was a separate minerals partnership between the US and Congo, which is designed to give US investors, US companies, preferential access to some of Congo's very good metal deposits. And this is obviously because the Trump administration is prioritizing shoring up US supplies of critical minerals and reducing dependence on China. So this partnership is part of that. And we are already seeing in the space of a couple of months, some deal making towards the US and American companies. There are flows of copper being directed by the Congolese state towards the US, probably used to go to China. A US government-backed investment vehicle called Orion CMC has announced a preliminary deal to acquire stakes in Glencore's Congolese copper cobalt mines. And a few other American companies, one other, a company called Virtus Minerals, has struck a deal to buy a Congolese company. It's in the process of building a very large cobalt mine. The government of Congo, like the government of Zambia, is very, very, very keen to diversify. They don't want to keep the Chinese out, but they would like to diversify the sources of investment, and having a US and to a lesser extent Europe that is now less averse to investing in these places that were previously considered a bit risky, definitely provides pretty decent leverage to the governments of those countries.
And just to underline that point, when I was speaking to the Zambian finance minister yesterday, he stressed exactly that it's not good for the country to have too much investment from any one place in the world, but to sort of spread the risk and have investment from everyone. The Zambian and Congo governments have realized that they have much more leverage now. And where previous governments perhaps kind of leaned into resource nationalization in terms of like trying to extract as much tax revenue as they could possibly get out of the mining companies to the point where they chase some of them out and trying to grab shareholdings in companies, the governments, at least in Zambia and perhaps to an extent in Congo, are being much more strategic about how they're looking at their resources and this idea of resource nationalization, where the state mining companies of each country, each government, are now looking to tap into the equity, the minority stakes that they have in the mines in their countries, and say to the majority shareholders, look, we own X percent of that mine. Give us, on commercial terms, whatever the percentage of copper that the mine is producing equivalent to our equity stake, and we will then take that copper, we'll pay for it on commercial terms, and we'll take that copper and trade it with whoever we want on whatever terms we want. So it does give them that leverage and choice about where that copper goes to.
And Matt, I know you and I were speaking a bit to the Botswana Minister of Mines, a little bit about how they're thinking about that as it pertains to diamonds as well. So that's a really interesting point you brought up there. Before we let you guys go, I wonder what your takeaway has been throughout the week. What is it that you're going to be watching out for? As you mentioned, it's been quite a lot of talking and walking and meetings and rhetoric and discussions and reporting that you guys have been doing. But I wonder if there was one thing to sum up the week, what you would say. Will?
So top level, in terms of demand, there's obviously this sort of clash of the superpowers between US and China, with the US acknowledging how far ahead China is in mining, processing, refining of key minerals. For African mining ministers, if you listen to officials from Congo, Zimbabwe, Guinea, and others, the priority is that previous scrambles for African resources went badly for Africans. So there's a really strong emphasis on not being dictated to by outsiders and buffeted about by the needs of others, and a focus on trying to maximize economic benefits for the countries where the minerals are found. And what they're talking about most of the time is insisting on more processing, more manufacturing in their countries. I think it makes sense that I've heard a few approving comments this week about OPEC and the Middle East asserting itself over the oil industry all those decades ago. It's about trying to make sure that this time around, the mineral resources, which the world wants so much, drives the kind of economic development that, for example, these ministers see when they go to the Gulf.
That's a super important point. For me, also, I think that 2026 could be the year, or maybe the year where the rubber hits the road in terms of the US and the EU putting their money into the infrastructure like the Lobito Corridor. The president of Zambia said that work after he lost count of how many conferences and workshops and talk shops there have been about investing in the Lobito Corridor, that this is the year when the brick and mortar is actually going to be put into the ground. I think on the Congolese side too, with all the deals that have been negotiated and struck, people are going to be watching very closely about whether that does actually hit the ground. And even in Zambia, where one of the big US companies, Cobalt Metals, should be taking some pretty critical decisions on developing their massive mining project in Zambia too. So I think this time next year, we could be able to tell much more clearly whether the European Union and the US really do mean business about doing what they've said that they will do in Africa.
And you can read all of our coverage of the Mining Indaba across Bloomberg platforms now. Here's some of the other stories we're watching across the region this week. Kenyan venture firm Delta 40, backed by billionaire George Soros, raised $20 million to expand its financing for startups across the continent. And Petrosen, Senegal's state-owned oil company, plans to conduct its own $100 million exploration campaign this year to discover crude in onshore fields. You can find these stories across Bloomberg, including the Next Africa newsletter. We'll, of course, put a link to that in the show notes. This program was produced by Adrian Bradley and Tiwa Adebayo. Don't forget to follow and review this show wherever you usually get your podcasts. But for now, I'm Jennifer Zabasajja. Thanks as always for listening.